reporting. I got to make sure my settings are good too. Output. We're going to take this off. Actually, it's good where it's at. Yeah, we're good. All right, so now we're live. All right, so back to what I was saying. So I use the smooth moving averages because you guys came today. I don't know what you guys use. What do you guys use? You guys use, I know Razzle Dazzle. I know you don't use Webull. You use Wealth Simple, right?
For trading, but for like I'm mostly on Webull just checking the open interest and the charts for the like
Okay.
Webull's a way better platform for that. But Well Simple I do it for trading because everything's free. That's
Right.
where my money
Okay.
is. But yeah,
Okay.
I'm familiar with Webull, but you're using the desktop, right? So I do have it on there, but I'm mostly just on my phone.
Yeah, the desktop, it makes a world of difference because I can't use Webull doesn't allow me to use my custom indicators on Webull. So when I get on my actual phone, like this is the most that I could see. These moving averages are all I could see. I
Yeah.
could only use my custom indicators on the actual desktop. So that's why I went and made sure I got a really good laptop too for when I'm out on the road. I'm not dependent on my phone. So yeah, I'm definitely gonna because you guys came though, I'll give you guys the actual script for this smooth moving average so you guys can have it
Hmm.
because you guys made the sacrifice and I'll you just copy paste that into Webull on desktop and then boom, there you go. Make sure you
No way.
save the layout. Yeah. So make sure you save the layout. That way every time you come on Webull and for every stock you look up, it shows up. How you save the
Okay.
layout is you got to come to chart layouts and then save layout, name it what you want, and then after that you got to come here to the Poppy said. But yeah, I'll DM you guys the code set separately. This is just our little secret. I mean, it's being recorded, so everybody who watches is going to be able to see anyway. But yeah, so um, yeah, so I'll definitely get you guys that set, and then you guys will be able to go through every stock because this, in conjunction with the fibs, it's actually what allows me to predict price really well. Why? Because while mean reversion is a concept, stock doesn't always revert to the mean because you can have like information based or some buyer who steps in and they kind of throw the stock off out of the mean reversion regime and into more of a momentum regime. So yeah, those are the two regimes. Those are the two regimes in the stock for anything. It's either mean reversion or it's momentum. So the stock could only be in those two phases. It's either in the mean reversion stock, even when it's chopping back and forth like Rivian right here on this weekly chart. This is just the mean reversion regime. Every time it seeps out of the mean, it finds its way back in, either to the upside or the downside. It just finds its way back into the mean. So when you understand that, you could kind of just play the outer bounds. And then, especially on the weekly chart, it's very beneficial to do that. And that's actually how I hit USO. I'm about to get into that. So, like, whenever it gets out of the outer bounds, whenever it's outside the purple or the green, and it's in a mean reversion regime, you just play the opposite direction. And then usually you will have options tell you the same exact thing. So like call sellers, call buyers, etc. They're gonna get on there and tell you the exact same thing. But those are the two phases of a stock, any stock, either mean reversion or momentum. Momentum, whether it's going up or whether it's selling off. Here on Rivian, obviously we're in a mean reversion regime. It's been chopping for weeks. Now it has been in recent weeks, it has been kind of going crazy. And that's another reason why I decided to play it too, because I saw the volatility was high. They actually compressed it for this week, which is unfortunate compared to last week and the week before that. You see, the week before that, it ran up 20%. And then last week, it actually ran up and then it sold off. But ultimately, I was hoping for a sell off into this bottom to these bottom smooth moving averages into the 1630 to 1590 level. That's why I was saying PT1 is 1630, PT2 is 1590, because I'm looking at these means, I'm looking at the moving averages, and I'm seeing how Rivian closed last week. I'm thinking it's going to retrace back to the bottom of the moving averages. It finds support above the 4 moving average on the week, which was, it blew my mind, because I'm also looking at these guys here on the open interest. And if the, by the way, if the stream freezes at any point, please tell me as soon as possible. But because Discord does that, the streams like to freeze. So yeah, right here, I'm looking at this call seller at 18. You see, he fried it to 0. And then I'm looking at somebody else getting yesterday at 17.5, and he converts. He converts, and they just fried it by inches. And I'm so not used to that. I'm not used to them doing it like that. Usually, whenever they have call sellers enter, those call sellers, they send the chain so dramatically the opposite direction. And because we were already in a mean reversion regime on Rivian, I'm thinking we're gonna go touch the bottom of the EMAs. Now, granted, where did I make a mistake on this play specifically? In my opinion, it's actually the fact that I didn't really check any DPs on this, or like I was just playing chart, open interest. Sometimes it works, sometimes it doesn't. And that's when I feel like I stepped outside of my system. Because whenever I stay inside of my system and I play DPs and then I use the chart and then I use the open interest, it always works out. It never fails. So this was one of those trades where I feel like it was slightly stepped outside the system, solely for the fact that I was not necessarily concerned with whatever was going on the DPs. So now, despite that, I still felt like we had a really good shot because we had the 100% quarterly fib. Mind you, for these quarterly fibs, I just map these once every quarter and then they sit there for the entire quarter. Price will end up tracing through this entire Fibonacci retracement throughout the duration of the quarter. So throughout the 3 months, price will end up doing whatever it has to do between these price levels on the fib. I gotta hop off to deal with the fam. All right, though, bro, that's fine, my man. I'm recording anyway, so then you'll be able to watch it at another time. But yeah, so essentially, what I'm looking at is I'm looking at Rivian, and they propped it up on the week, which is fine. But I didn't think they would do that with the amount of call sellers that were on the chain for this week. And then that's how Rivian fried. Another play that I was looking at too, that I regret for the day, is Verizon. Because I actually was in Verizon, but I got out like not even a minute later. So I didn't even report it because I had got out so fast. But Verizon right here, we actually had a situation where Verizon was all the way up. It bought up all the way to 44.84, and I never thought it would do that, but it did because Verizon actually had DPs behind it this time. So if I come here, let me see.
So with Rivian there, though, you weren't those EMAs that was in. It was bouncing in between them, but those other weekly candles that had like it wicked up past them and then shot back down. Why'd you play within those bands?
Because these
If that makes
bands,
sense.
let me try to see if I can answer the question. These bands are essentially where price is most comfortable, for lack of a better word, because these are the moving averages. And as you can see, if you pay attention, price actually stays within these bands more times than not. And when it doesn't, it has a volatile rejection back into these bands. So that's kind of how I am able to predict price, at least on a weekly basis and on a monthly basis, especially because I'm looking at where it is in between the bands, and then I use the data around it to predict whether it's going to stay within the bands or whether it's going to leave. But I would say 7 times out of 10, stocks usually stay within these bands. And that's why I have these EMAs positioned at the numbers that I have them. So I have the 4, the 7, the 9, and the 14. 4, the 7, the 9, and the 14. These are the best for short-term trading. Like hands down, these time frames are the best for short-term trading. I don't have any 50 EMA. I don't have a 100. I don't have a 200. I don't have anything like that because I feel like the larger the EMA gets, the less significant the actual moving average is because it takes price a lot longer to revert back to those means. It can whenever it eventually does, but I needed to create a set of moving averages that price always touches. Does that make any sense?
Yeah, that does. So you like to play within those bands when, like, you see those weekly candles before this week's. You want, like, it might be gaining too much momentum to clearly see where the price is going when it wicks up like that.
Um, it depends though. It depends because there's data surrounding it. I'm sure at some point while Rivian was rallying last week, there had to be some type of call seller somewhere that caused it to sell off the way it did because it did run off to start the week into what was the high of this candle? $20, and then it ended up sinking back into 15. So you would depend on the surrounding data for that, but generally speaking, I needed to create a set of moving averages that price always touches. Let me see if I can make a visual. So let's go ahead and remove these.
But you're more comfortable playing the stock when it's within those moving averages.
Not necessarily. I wouldn't say it's a matter of comfortable. It just tells the story of the stock better. Like I could read the stock. Um, the moving averages, they're just important so I could read the stock, where it's going to revert to the mean, where it's at on the fibs. Um, I'm going to show you something in a minute. But like you see right here, like this is the 150 EMA. This does nothing for me because you see the last time price touched this EMA, and this is the weekly. This does nothing for me. Like I can't really understand or get a feel for where price is constantly reverting to using this type of EMA. The price is way too far out. So that's why it's important for me to put something that like the SMEMA because price always touches. And because it's always reverting there, it makes it easier to predict.
Oh, yeah, that
So
makes sense to me.
yeah, so that's the foundational concept of why I have the 479 and the 14. Now, let me go to USO, but let me finish with Verizon first. So
Yeah, Verizon is a good one.
Verizon paid both ways because it paid going up and then it paid coming down today. So this is what happened. Uh, this morning, I saw Verizon gapped up to 44.84. I wasn't even expecting that because PT1 on Verizon was 43.59. And I wrote that in the Discord. I said 43.59 is PT1. Ultimately, it ended up running past that because it came to come get this four EMA. As you can see, Verizon was oversold. Why was it oversold? It wasn't oversold because it was selling off. It was oversold because it sold off into this 100% fib. So like I always say, the quarterly fibs, the 0% and the 100% Fibonacci on the quarterly fibs are the most like important. Those are going to be where you have support resistance depending on where the stock is. Everything in between it's important too. But the 0 and the 100%, they're the most obvious. Like whenever a stock runs into the 0% fib or the 100% fib, it's the most obvious that there's going to be a major reaction there. So that, in conjunction with the fact that Verizon actually had an all DP that came in at 41.65 last week, so it had an all DP, so that just put a ticking time bomb on everything in terms of when Verizon was going to strike. So I really liked Verizon. I don't know why I sold. No, I'm not mad at the fact that I sold out at like 50% profit, but I should have gotten in at close because price actually came back to where I had with my cost basis at close. So I could have got back in at 12 cents at close and then wrote it up to like, because it went to $1.50. So it did like 13x, 14x. But anyway, Verizon for today specifically, the reason why I'm kind of salty today is because I saw it at 44.84 and I actually had puts. I had 44 puts like around like 10:35, 10:30 because I knew it was going to sink back to the 43.59. The reason I knew that is because I'm very familiar with these moving averages and being the fact that like this is the first time touching the 4 EMA after a major sell-off. While it did go to $45, it's not going to sustain itself. So I knew Verizon was going to end up tucking itself back under the 4 EMA and touching 43.59. Not to mention, I also have these same moving averages on my daily chart, and they look completely different. I want you to notice that. So, like on the weekly, my moving averages look like this, and the same moving averages on the daily look like this. They do not look the same. So you have to be able to look at the daily, read what the daily's telling you, read what the weekly's telling you. The monthly is the same concept. The monthly looks nothing similar to the daily or the weekly, and it goes the same for every time frame. Each time frame has its own story to tell. So coming here for Verizon on the daily, I also saw that when it gapped up, it left the averages hanging down here. And because these averages were hanging down there and it was coming out of a downtrend over here, let me make sure I snip this. Because it was coming out of a downtrend right here in this area and it just zapped up and left these moving averages hanging, these averages are going to act like a magnet on Verizon. They're going to pull it back down because it didn't necessarily properly go through each moving average because each moving average acts like a level of resistance in this scenario. So like how it usually needs to go is Verizon has to come, touch the 4 EMA, find support here, move higher, touch the 7, find support here, move higher, touch the 14, find support here, and then move higher. What happened here instead is that it found support at the 7 and the 9, but it ran into the 14 and it just kept running up higher. It's supposed to find support at the 14 in order for it to be moving up in orderly fashion. So you would need another day or 2 days of it at the 14. And in between one of those days, you would have like a kind of a sell off. So you'd have like a light sell off that would find support down here at this 7 EMA right here. It'll be a super light sell off. And then the next day, it would end up rebounding and catching heat and then going higher. I think a good example of this might be what's that one stock called? Cloudflare. Let me see. So like yeah, right here on Cloudflare. Cloudflare ends up rallying. So Cloudflare ends up rallying on this massive trend, but it's because it actually had to come down and when it sold off, it came down, it spent some time fighting at that 14, and then it came up into the 7 and the 9, and then it spent some time fighting here, but then it failed. Ultimately, it failed. And this is like more of a proper price exchange. And that's why it's been able to go on a sustained run to the upside because price action it properly cleaned itself because of this sell-off that started up here. So then it based out and then boom, now you're going higher on Cloudflare. Verizon didn't do that. Verizon, it just went straight through the 14 and it gapped up and it kept trying to run. So in that scenario, these EMAs, they act like a magnet towards Verizon and it weighs on Verizon, it pulls it down because it didn't clear price properly. Despite knowing all of this, I second guessed myself because I wanted Verizon to sell off in a certain amount of time. And when I bought, I think it was in the middle of this candle, and I saw it kept going up. I sold out like a minute later. And then later on in the day, I saw that it kept topping here at this 14. So I was like, maybe it's trying to go retest the highs. So then I went and bought like 150 calls for like 2 cents. It was nothing. And they ended up frying. But on the other side, those $44 puts that I had, I actually bought them for 3 cents. Verizon, this same 44 put ended up going to 70 cents on the day. So that would have been a 20x on Verizon. And the play was rather obvious. So that's why I'm kicking myself over it. But Verizon was definitely one of the stocks for the week here because you had this all DP order that caused the rally. You could have made, let me see, what was the top of this? Because what did we have? We had the 44, we had the 43.5 call. The top of that one was 150. I was in at 12 cents. So that would have been like 13x. And then you turn around today, you play Verizon correctly, you would have made 20x after that. So there's no telling how much money that could have been made in between Verizon and between yesterday and today. Um, so yeah, that's why I'm kicking myself over Verizon a little bit. Now we're gonna get into USO, and this goes back to the mean reversion concept I was speaking on. So USO, I have my quarterly Fibonacci's mapped out for USO for the quarter, and I saw that down here the previous week, because this was the week. This week it did really well too, but last week was when I played it. This week, last week I saw that the week before it had a red candle that found support at the 0% line, and essentially it was like plug and play from there because USO also had all DPs. Let me see. Oh, let me see.
Yeah, perhaps that all blocks on the Verizon is what sent it through those EMAs that you're talking about.
Right. Yeah. So this order right here, this for 250 million, that's what sent it through everything. Like, because yeah, whenever these orders come in, they like it's like nitrous. So then the stock kind of loses sense. So the stock is like a lot of orderly things it was supposed to do, it doesn't do it anymore. So, but
I
that's
like
why, yeah,
I like some of these like Verizon and Uber. The price movement on them, you know, it doesn't move too much, but the IV is so low
yeah,
that when it does move that 3-4%, you can 10x 20x the trade, and those seem to be more predictable. Some of these stocks, rather than the high flying tech ones.
right, right. Yeah, that's exactly right. Because especially with the IV, anything you can get low IV these days is a blessing because the MMs they have it priced so crazy right now. Like it's not even fair. Like that's why Monday, Tuesday, Wednesday, I'm not even pressed to play anything. I might, but the play has to be. It really has to catch my eye. Otherwise, I'm because like Monday, Tuesday, Wednesday, the IV is just through the roof. Nothing wants to decay, and then Thursday comes and everything just cuts back 75%. So,
Mm.
but yeah, with USO here, we had these two orders, one at 112 and then one at 111.63. I remember seeing these orders the week on this week here, this red candle week. Let me use the snipping tool. Those orders came in during this week, and on the days they came in, I saw that they didn't even go touch. So because I had that pre-existing knowledge, when I saw that it was at the 0% fib again, I saw a call seller came in at like 100 for 3,000. Not a call, a put seller came in at 100 for like 3,000 vol. And then I looked it up into the flow. One thing I will stress is the flow has been added to this Discord, and it's amazing because um, the reason I say that is because there's so many options that you could use while you're researching flow. You can really pinpoint options and transactions that are actually meaningful in the stock market. For example, if I wanted to see what was something that had a call seller on it or a put seller this week, I'm not sure. So I'm not even going to put a ticker. But if I wanted to see, let's see, for this expiration, what I usually like to do is I like to do contract side. I'll just make two separate um, requests. I'll do one for call, one for puts, just so I don't mix everything up. And then I'll do it by contract, moneyness, out the money, and then I'll put a start date and end date usually if I wanna see something recent. So like I'll put 2026 07/15 to 2026 07/17, which is today. So I'll be like, okay, essentially what I'm typing in right now is let me see all calls sorted by contract amount that are out of the money all call transactions that are out of the money in between the last couple of days. And what that does for me is it actually needs me to, okay, let me put in the big flow ticker instead.
I didn't even realize that you can do that with that command.
Yeah, because I've been adding them. I've been adding these different features over time. So yeah, so it's like, okay, so now I'm able to see all of the calls that are out of the money on any stock in the market within the last 2 days. Why? Because I know whenever these option sellers get in, there's an imminent move coming. A move is coming, and it's very, especially when they do it on the weekly expiration where the week is about to expire. If they sell options on that week expiration, that means that the stock is about to move during that week. So it'll come back and it'll return everything out of the money, just calls. So I'll just look at calls that came out of the money. Now, this doesn't have any expiration date, but like for example, you had yesterday somebody sold calls out of the money on Netflix at $78. $78 strike. These other expirations, I must have missed the expiration date, but somebody sold out of the money calls on Netflix. So like during the day, I like to check this around 3 o'clock in the afternoon. That way I can see as many trades come in as possible for the day. And then I'll literally create a thesis off of something that I see from there. So that's how I saw the USO guy. I saw him come in for 3,000 shares on last week's expiration. And that's what I looked deeper into USO, and then I kind of figured USO was a lock. It was coming off of the 0% fib, that support. And then I also had my moving averages right here. That's what made me say what the price target was. My 4 EMA was hanging right here at, I forgot what it was, but I think I said 114.50 something. I forget. It went to 114.70 and then it recoiled on the week. It gave almost everything back. This week it gaps up and now it's back within the means, like it never left. But that's essentially how I play. I play the Fibonacci's, I play the moving averages, I play dark pools, I play open interest. So I could, and then with all of that, I'll create a thesis and get a feel for what's going on. MU, I was wrong about MU this week because there's actually a all DP that's hanging, that they just have hanging in the air on MU that hasn't been touched, and it's for like $1 billion. I actually have it in this MU thesis section. Let me see. So yeah, let's see if I can make this smaller. Okay,
Maybe
so
wild to get like an LLM like Claude or something and put this in and have them just spit out the best play for the week.
I don't know how reliable they would be. That's the question. Because me and John were actually working towards a system where I don't have to put in the open interest every morning and it could just do it for me. The command is already in, but we just need more data so then we could do some machine learning. And then we'll go based on how that goes, we'll go from there, to be honest. But Claude or an LLM, they would have to literally, like, I would have to take my brain and then put it in the LLM and then train it for it to know exactly what I'm looking at.
Yeah, no,
And
it
then
would
call
be.
out accurate. Yeah. So
It'd be a lot of work for sure, but it'd be pretty cool just to have some outputs and see what it
for
says.
sure. Yeah, I definitely agree. Yeah, I'm all for like the less work I have to do, I'm all for that, to be honest. But yeah, I know it'd be a very tall task to put Claude through because Claude, especially when it comes to like financial data and the financial concepts, the LLMs, they have their how do I say this? They have like a bunch of preconceived notions about how finance works and how stocks work and things of that nature. And it's like um introducing my ideas and the things that I've learned and found to them, it seems very foreign. And I see that it has a hard time grasping what I know because it's so used to whatever it's been fed. And especially with a lot of the scrutiny with regards to like how LLMs can be used for stock data and for making recommendations, things of that nature. I feel like the people who engineer those LLMs, they anchor those LLMs into certain financial concepts and data that may not necessarily be accurate, but it's like the safe way to do things. I don't know if
Mhm.
that makes any sense. So like whenever I like introduce, like I'll feed it the content from my book, and then like I'll see it actually like kind of try to revert itself back to whatever it knew before I input my book into the system.
Oh, that's
So
interesting.
yeah. So I feel like, especially with regards to like finance and stocks and stuff, I feel like they anchor that information. They anchor Claude and whatever information it's been fed. That way, it's hard for it to actually kind of break out of that mold. That's another reason why I haven't been too pressed to add AI to the because yeah, I've tried to expand my knowledge through it, and I see that like if I don't, it's one of those things where it's like if I don't think of it verbatim, the AI is not going to think of it for me. So then I just left it alone,
Mm.
and then I went back to just learning it on my own. But yeah, so um, because especially with the concept of call sellers and put sellers, nobody knows about that stuff. Like it's only a handful of people. Like it's a very niche amount of people who understand call sellers or put sellers. You still have people who see large amounts of flow coming in on unusual whales, and they think that that's one big buyer.
Yeah.
And that's what 99% of people who see that type of data are thinking.
Yeah. No,
So
I'm so grateful that you showed us that because, like, yeah, I had no idea, but it's the same thing I see constantly. People are like, "Whoa!" Like Figma there with the almost 90,000 open
yeah,
interest on the 27 call. I saw people posting, "Oh, what's going to happen this week with Figma?" It's like it's
it's
like
like
just
yeah,
someone sold a
buddy.
bunch of $5 contracts, you know?
Yeah, man, they're ceiling price. Actually, they're actually making sure it doesn't move. So yeah, it's like if you don't understand these concepts, and then if I try to feed these concepts to AI, AI doesn't really understand what I'm talking about. So yeah, that's why it's like my system specifically, it's kind of hard to feed it to AI. But yeah, so moving on. So now I'm looking at different plays on the week. So how I'll go through the weekend here is I have several ways that I'll process the weekend on what plays to look for next. Me, how I like to do it is I like to do it like on a time basis. So like I usually like to look up DP big prints, market hours only, because it'll only return me all DP orders. It'll only return me the biggest all DP orders. And then based on that, I'll be able to time a thesis because I know the all DP orders are very short term. They're like 2, 3 days usually, generally speaking. MU is taking about like a week because the RDP order hasn't even hit. I'm sure once the RDP order on MU hits, it's going to do whatever it needs to do right after that. It's not going to have much of a delay. Because that's another thing too. Like the only times RDPs take long are when, for whatever reason, the algorithm prevents price from reaching where the RDP came in. And that could happen too. And in the event that the algorithm prevents price from reaching where the RDP came in, you just have to wait. But the thing about it is that once it taps that price, it's going to do whatever it needs to do within the next 1 to 2, 3 days. So how I'll look through the weekend here is I'll put in DP big prints. Actually, not for the last one day. I'll do it for the last 10. I'll do it for the last 10 days. And I'll specifically look at the biggest all DPs for the last 10 days. I'm seeing AMD. AMD actually hit. And the AMD all DP hit. So like if we look at AMD now, I know it died. Yeah, it definitely died. AMD came in at five. The all DP on AMD came in at 557, and then it
Mm.
came and touched it because 557 it came in. That was a Friday. It came in and nothing happened because it didn't touch the order the following day. It actually gapped down, and then it came in on Tuesday. I think that was Tuesday. Yeah, Tuesday. It came in on Tuesday. The order finally tapped, and it's been in free fall ever since. So what that tells me is it tells me because MU and AMD, their all DPs came in at the same time. I thought they were going to go both hit at the same time. But what this tells me is it tells me that AMD's all DP was a seller. MU's all DP might be a buyer, which might be the difference. Even though they came in at the same on the same day, I thought they would move in unison, but they're not. So AMD tapped the all DP and then it's been selling off ever since. If that was obvious to me, then I would have just played the downside because AMD just sold off $100 in the week. Man, I know it made crazy money. So yeah, so AMD, we have AMD here. QQQ came in a couple of days ago at 715. That order hasn't hit. These two orders at 715 haven't hit. I'm already aware. And then I'll just keep looking through these. I'll look through these up until like 100 million. But a lot of these are like ETFs and Vanguard ETFs. So I'm really only looking for like individual tickers for the most part. I see Meta here, Google. Google came in today. Apple came in yesterday. I saw Apple just touched this 330. It
And
just
what
touched this.
about I know I might be going a little bit off on a tangent here, but remember those Tesla? I think they were all blocks, and a bunch of them hit. It was like 416 or something. This had to be.
Yeah, I
I think it
remember
was in the
that.
winter time. Yeah, and the stock just went
Died.
to free fall after that. Yeah, but it hit way above like 10 or 15% above what the closing price that day was. Like what's up with that phenomenon?
Yeah, so my theory is that those are orders that come in because that's essentially what we're seeing with what's happening to MU right now. So it's just that the Tesla ones were no, I believe the Tesla ones also were midday. Those were also midday. So those were also all DPs. Um, it's just that they continued to hit in the after hours too, as I remember it. So they also had all blocks that also were selling off into the. And I remember that one because that was actually when OpenBB was still a thing. So the thing with Tesla is that, and in general, what the theory is with that phenomenon is it's basically if a buyer comes up at a certain level and there's liquidity other places, they send the stock for the liquidity the other places before sending it back up. So let me go back to where because yeah, it was around here. Yeah, it was around here where it came in because yeah, Tesla just kept selling off and selling off and selling off. But yeah, essentially what that is it comes down for liquidity before ultimately going back up and hitting the orders where they came in. Um, so that's the best way I could explain it because that's actually what we watched with MU this week, and I've seen that in multiple other cases of where like price kind of just it kind of avoids where those orders came in. It avoids touching all together. That way it could clean out liquidity in other areas. And then when it comes back up, then you will have more of a sustained move. Because even with the volatility Tesla's had, it's still somewhat sustained. Tesla really hasn't moved in the last however many months since it came back up to 415 or whatever.
Yeah.
So yeah, so it's like it's usually a clearing out of liquidity type of thing, and then once it comes back up, then it does its thing. So like MU here, the order came in on what 710 at 1,005, or was it 709? I don't remember. But one of these 2 days, it came in. The order, the all DP that we're waiting for on MU is at $1,005. So let me write
So
this down.
there's an LDP at over 1,005 when it was
Yeah,
sitting around 700, or
no. So let me show you. I'll show you the order right now, actually. So the order's right here. Now, granted, where's the $1 billion order on MU? It's probably on this page. But that's another thing too. Whenever you see the stock continuously hit for all DPs, like it is right here, you have to wait till it stops because it also serves as an indication for why it never went to go touch. So whenever you see like continuous days when it's hitting for abnormal amounts, like today it hit for abnormal amounts, yesterday it hit for 122 million, you have to wait till it stops. There's a period where it stops. It stops for like a good period of 2 or 3 sessions, and then that's when you're going to start getting your moves. So right now, MU is not even something to touch. But yeah, so they came in at 1,563 on 7-9. So this was, if we come back here to 7-9, that was this day.
Yeah.
1005. I'm just gonna mark it as 1005 for the sake of marking it. And let me change the color of this to yellow. So yeah, it came in here and it's never touched ever since. So in essence, what it's doing is it's doing something similar to what Tesla did. It's on a smaller scale because I do think MU is going to bounce back very strong very quickly. Um, but yeah, so the $1 billion order comes in, it sells off. You still have all DPs heading down here, so you're probably going to have a few more days of it touching these all DPs. You're probably going to have more all DPs come in, and that's what causes the stock to delay its all DP. But it's something that you definitely can see because like that's what I know. Every time I see all DPs here, like on consecutive days that keep hitting for abnormal amounts, it tells me the stock is not ready for whatever move it needs to make. So you just wait and you be patient on that. Um, a good example of that is actually Meta. That was Meta on its first run up because there was Meta's constantly doing something crazy.
Yeah, Meta's a wild, awesome stock. Dude, you gotta watch that on Wednesday. I don't know what it is. Whenever there's news, it's on Wednesday.
Yeah, Wednesday's smack for Meta. Let
And
me
there it's
see.
and that's 0 day till expiry Wednesday, so time to play it, man.
Yeah, no, that's facts. But I think when Meta ran up, it was on 7-1. So let me see here. Now, granted, yeah, you have a bunch of all DPs. Oh snap! You have a bunch of all DPs from previous days. But yeah, so this is Meta in a nutshell. So I remember seeing Meta coming in with these orders. It had abnormal orders for a while, starting on the 19th, the 15th, really. 15th, I seen this order come in, and it just kept hitting for a period of days. 15th, 22nd. Then you had 6-5. And I remember Meta just kept chopping. Oh my gosh, it was driving me nuts because they actually fried me on something one week. So it kept chopping, and because these all DPs keep coming in consecutively, the stock's not ready to move. And then 630 comes in. You have these orders coming at 560, and then boom. The next day, Meta rallies like 8%. It rallies like 8%,
Hmm.
and the all DPs just stop for a period of time.
Hmm. So what's the
So
strategy there?
you would just have to wait for the all DPs to stop. You have to
Hmm.
wait for them to stop. Once
You
they
expect
stop
to
over like one
see
session, 2 sessions, you don't see anything, then that's when it's coming. Because that also
hopefully
happened.
see a
Yeah,
put
that also
buy
happened
or
on
call.
UNH. Right. And then you look at your other data points and it should tell you a story.
Yeah.
But yeah, let me show you how, because I actually have to retrace this to one of the previous quarters. So this is how I trace quarterly fibs. I come on the quarterly here, and then I'll go back to the previous quarter, not this current quarter. Let me delete this. So like for example on MU, if I'm trying, let's just imagine for the sake of argument, this quarter didn't happen, the one that just ended in June. And then we're just starting that quarter. I'll map this fib, and then I'll map the fib for the previous quarter. We're just starting in April, May, June. We're starting that quarter. So then I'll map the previous quarter from January to March, and then I'll just let that sit for the entire quarter. And it'll literally tap the levels that it needs to within that quarter. It'll trace that quarter to perfection. So if we actually cut off here, let me see, 626. Yeah, so this was the last quarter of the week. This was the last week of the quarter, because 630. So yeah, this is let me snip it again.
So it jumped over the Fibonacci band and now it needs to go back into it.
Well, in this case, it was in a strong uptrend. So the regime was a momentum regime. This is not a mean reversion regime. So it literally just traced the top of the upper bound moving average all the way up because this is a momentum regime. It didn't really spend any time reverting to any other means because it just kept testing the top of the mean and it kept finding support.
Mm.
And that's how it moved higher within the quarter. Because you see one way or another, it taps every level on the way up. And
Yeah.
then like let's say during a week where it gaps up, let's say for the sake of theory, this week closes and then it gaps up into this 1200 level. Well, it gapped up into the 1200 level. You know your mean is down here. You know your average is down here. And you know that there's another level for the fib right below that at 1041. So you would just play the short back to the mean.
Hmm. Yeah, that's a wild chart. Actually, that's a good case study right there.
Yeah. The same happened with Marvel, Intel. They all look the same.
Yeah, that's nuts.
The chips, they all look the same. They all did exactly this.
So if you can kind of figure out what the momentum name is, and if
Right.
it's following that chart, then yeah, you can also play long as well.
Yeah, you could play long for a quarter. You just play a quarter out and just let it sit.
Yeah.
But that's the kicker is figuring out what the momentum because I was thinking this one's was CB. I'm not sure though. It might be CB still. Yeah, it might still be CB. But I think the momentum play for this quarter is CB.
Oh,
And
really?
yeah, I think CB is gonna because it all depends on how the stock opens on the quarter. But you also need it to sustain throughout the quarter. So it's a catch. So like what I mean by that, let me take a because Marvel was like the most obvious case study. Let me show you. So like if I delete the quarter because this is the most recent data, let me go back quarter. So like let's say for the sake of argument, we don't know that this quarter is going to happen. I would trace the previous quarter. Like okay, now let's gear up for this quarter. Look at where Marvel opened on the new quarter. Marvel actually opened above the 100% fib. So like whenever you have a stock that opens up above the 100% fib, that's probably the most clear indicator that it's about to go and do the same uptrend that it's doing here.
Okay.
So you have these variations of fibs because like for example, what were we just on? We were just on
That's
MU.
pretty good. Oh,
Yes.
yeah.
So you see MU, it ran up all the way to the 423% fib on the quarter, but it started out at like the 38%. That's hard to read. It's hard to know that it's going to come out of the 38% and run all the way to 423% because that's uncommon. What's really
Hmm.
common is an open at the 78% fib or an open at the 100% fib. If you get an open on the quarter at the 78 or the 100% fib, then the stock's looking really good. Like start looking at the fundamentals of the company and then start looking at the options. And then boom, that could be your indicator that you could just play that for a quarter out.
Where did CB open? Did it open on the 100?
I think it opened up 78.
Yeah.
Yeah, so
Okay.
it opened up above 78, and then it actually sold back into the 78 now, but it's finding support. They actually
Yeah.
report earnings, I think, next week or the week after. But and fundamentally, the company is extremely sound, extremely sound.
Oh, yeah.
Yeah, this is one of Warren Buffett's companies, and then they trade out of a super low PE. You see right here, 12.44 PE ratio. So we'll definitely keep an eye on it. Given how it just sold off this week, I kind of got reluctant to actually put out an option for November. But like theoretically, let's say this really maps out everything. So it's telling me the top on the quarter for a CB is 465.23. If you go out to November, if you go out to November, you could get a 420 for 225 or a 430 for 170. And what that does for you is that now, let's say it goes to 465. You have the 430s for 170. 430 to 460, that's $30 of intrinsic value. So your option's gonna be worth at least $30. So that's a 30 ball. That's a whole 30 ball right there.
And that's well, what's the train at right now?
It's trading at
3.
352.
Okay, so that's like what 30% run.
Yeah, so it'd be like a 30% run on CB. And you know what's crazy is that even if it did have a 30% run, the PE would still be below 20 because
Yeah, I know
it would need to
it's hard
double.
to imagine. It's hard to imagine that, but it's also hard to imagine Micron going to 1,000 when it was trading at like
Right, right.
$115.
Right. Yeah, that's the thing with stocks. You kind of have to see it ahead. You have to like, and that's what breaks your brain. Because my brain, like, it gets broken sometimes, like trying to think of because you have to see the stock ahead of time. And not only do you in our case specifically, not only do we see it ahead of time, we need to see it ahead of time by a certain time.
Mm.
But it pays well. It pays well. But it is a tall task. Very tall task. So yeah, I'm looking at CB. A command that I frequently use is this fib scan command. I'll use fib scan and then I'll come to here to get all of my tickers because I just have all my tickers in this back test channel. So then I'll come to fib scan and then in this fib scan command, um, mode, and then I'll do window open high low, and then it'll search and come back and it'll tell me all of the let me see, prior calendar quarter. Yeah, so we're gonna go quarterly on that. And then what it's gonna do is it's gonna tell me the open high low of everything up to like today. So I'll look at these and I'll look at the open. Where did they open? These opened above the 78% fib. They're all in green. All of these stocks that opened above the 78% fib on the quarter. That way it makes it easier for me to spot which stocks opened above the 78% fib. These open below the 23% fib, the 0% fib, opened above the 100% fib, etc.
Okay, that's pretty sick.
So
Yeah, I always saw you using that. I had no idea what that was about.
yeah, it's a lot of stuff that I just add over time. So I don't know. I don't really do the best job of explaining it, but it's a lot of stuff that I add over time. So then I just have to do less work because it's a lot of work. I go through how many stocks do I have? I have 287 stocks in my watch list that I go through every day. So it's a lot of work. So anything that can streamline the process for me, then I'm at it. But yeah, so CB is definitely one of those stocks we're looking at in general. But back to how I look for stocks, I'll start off by looking at like the all DPs. After that, I'll look at all blocks. And then I'll actually go to a point where I start looking at unusual totals on the lit market because lit market orders also function as all DPs to a certain extent. Like they have a short time frame on them. But yeah, another thing I'll do is I'll put the exchanges CBSX, CBOE because those are options exchanges. I don't want those to come up in my totals, so then I'll fill those in so they don't come up in my totals. And then we'll do market lit, unusual totals, uh, percent. We'll do over 100%, and then start date, end date. We'll do 2026 07/15 to yesterday. Actually, I'll do the start of the week. So 13 to 16. And then I'll basically be looking for lit market orders that would potentially hit next week. So then it'll search that, and then it'll return back to me the top orders in that time frame. So boom, there you go. A lot of these stocks are stocks I've never heard of. Sometimes I just like to stick to the stocks that I've heard of. Like BP, I might be able to do BP. Warner Brothers had something, so then I'll look into it a little deeper. So I'll look up to Warner Brothers. It said Warner Brothers came in on 714. So 714. Yeah, these are two ARCA orders. So then let me see what the and from there I kind of just go downstream because now I'm in the all blocks. I'm in all DPs. WDB. WBD. Am I typing this in wrong? I am. So yeah, on the 16th, you actually had a pretty big order for Warner Brothers. WBD. So yeah, no all DPs though. So yeah, I see something on the all blocks, something on the lit market. So then now I'll come over here and I'll just analyze the stock. So I don't have this mapped on the quarterly, so let me map it. This stock hasn't really moved, but it's bullish. It's definitely bullish. That quarterly is definitely bullish.
But
So
they got bought out by Paramount, didn't they?
I believe they did. Why are they still on the market? They haven't got the deal. The deal? I guess the deal hasn't closed yet.
Yeah, and they got past a lot of regulatory hurdles and stuff. But
I
it's weird
see.
that it'd be looking bullish. I mean, they have a price for it, so you just expect the market to accept it unless something
Yeah, and
falls through.
that's why it hasn't moved because the market has been accepting it for the most part. So yeah, I guess Warner Brothers is somewhat uneventful. That's what I'll call it because it's still in the process of closing. It's gonna get delisted soon. Let me see if there's anything all blocks. One thing that I need to figure out though is how IBM did what it did this week because IBM did have a very big order come in last week and it literally sent it into limbo. So like right here, 7-9, you had this order coming on IBM at 295 for 1 billion. And then IBM ended up dying. Yeah, literally died. But pay attention to where it finds support back at that 0% fib. Now, granted, it might bleed below the 0% fib still, but 0% fib still is something you have to pay attention to in terms of support. And likewise, the 100% fib for resistance. But yeah, I got to figure out how IWM. I wonder if it's a volume profile thing. If maybe there was too much volume at a level and it caused it to die the way it did. But this play flat out paid, and it seemed like it wasn't anything spontaneous. They put earnings out early, but it looks like the dark pools definitely were expecting them to put earnings out early for sure. So yeah, I'll look through these various stocks here. And then I'll literally just go through each one by one and just look at the charts. So I have over 287 stocks. I'll go through each one by one. See if there's anything that I see that might catch my attention. But if you pay close attention, you'll see each stock, the price always touches its moving averages. It may not touch all of them, but they always touch moving averages. And that's just a testament to these EMAs I have set up here, the 479 and the 14. That's why I love it like this. I called CBRS, but I didn't play it. But I figured it was going to start heading back down to its 100% fib.
Yeah, those longer EMAs are more just for like critical support lines, eh? Like the 50, 20, 200. Usually, once they hit those, that's kind of showing the trend rather than your 4, 9, 14.
Right. Yeah, they're
That's
they're they're way more
a
long
different
term.
strategy.
Yeah, long term moving averages. I need something short term to where within any given week I could tell where price is
Mm.
getting pulled. Because that's essentially what the EMAs are. It tells me where price is being pulled at.
Yeah, that's
SpaceX
crazy,
probably
man.
SpaceX probably has a monster week coming back to the 0% fib next week.
Oh, yeah.
It's oversold.
Well, help yourself to the watch.
Yeah. You probably need another 2 sessions of it just basing out here because it still looks very weak. Still looks extremely weak.
What does Galaxy look like?
Let's take a look.
That one's driving me nuts, man. You had that $400
This
million all
and
DP
it's
and
been like I don't even know. Yeah.
like it
But yeah,
chopped and then it did have a good rally, but then it just sold off after that. Like it's been the last 3 weeks like down 35%. So
yeah, and I'm gonna show you. I'm gonna show you why it did what it did on the rally. It was just trying to get to the 100% fib. So, for example, if I come here to the previous month, um, when it rallied up, this was the previous month set. This was the previous quarter set of fibs. So when it rallied up, it was really just trying to make it to that 100% fib, clear it out, and then dump again, and that's what it did.
no way. Holy smokes.
Yeah. So yeah,
That's
that's what I.
wild.
Yeah. So it
But
made it to the 100% fib, failed, and then now it's tracking back down.
those so but the fib there, like what's that one at the 45, 168 or 161%?
These are just I don't really know the significance behind the actual levels, but like for a stock to go into this territory where it's at one, like how I want you to see it is like this area is where price is supposed to stay whenever it's in
Mm,
like a mean reversion regime on a fib level. And then like on a more granular level, that's when the EMAs and the moving averages come into play.
Listing's well
So
below all those at this point. So
right.
what's the mean reversion here? Go back up?
So the mean reversion is just for it to stay within these ranges. Now, granted, these set of fibs you're looking at, they're outdated because the quarter changed. So once the quarter closes, I have to change the fib, and all of the numbers on the fibs change. All of the price levels change on a quarterly basis. But it stopped about right here. So this was exactly. Let me see. This was the last week. Okay, so this large red candle was the last week of Galaxy. So yeah, that was a lot. That was the last. So this is what's actually for these set of fibs. So you had the week start out, the quarter started out. You had a touch at the 0% fib, and it essentially just tracked its way to the 100% before failing.
Yeah. Wow.
Um, yeah, it never got a chance to break out because if it did break out above the 100% fib, then it would have went to 45.89. And then above the 100% fib, not all stocks make it past the 161% fib, but you do have stocks that do that. So you could have went to 45.89. That's probably the max that I would have been able to see for Galaxy though. Would have been the 45.89, 161% fib.
But you know
Um,
what's kind of skewing that is that if you look at the full time frame, it's like a $700 stock because they did a not a SPAC, but where they like bought a company and then IPO'd through that company. So I
oh wow.
wonder how that affects the fibs. If probably completely negligible, like you said, it hit the zero and then stayed in that band between 0 to 100, rejected. But I just seen those higher fibs. Just wondering if, like, completely don't even need to pay attention to those ones, But
Yeah,
but
you don't.
45, it did reach that level there back in October, I'm
Right,
pretty sure.
right. But yeah, these fib orders, they come off their own calculations. They don't necessarily take the stock into consideration because the fibs come in based on the how I use them. They come in based on the high and the low of the stock. That's literally what I map it for. So I'll map the quarter. I'll map the high of the quarter, low of the quarter, and then boom. That's how I get the fibs. They just calculate on their own,
Okay.
and then you just go off that. So like that could change. Like this thing could run to 95, and then the quarter closes, and then I map for that quarter, and then it calculates, and you're gonna start seeing price for like 100, 180, and things of that nature. 180, 250, and stuff like that. So yeah, it's strictly the calculations that the fibs provide. It doesn't necessarily take into the account what the stock has done. It only takes into the account what the stock has done the previous quarter that I'm mapping it for.
Mm.
So yeah, right now with Galaxy on the monthly, looking at the monthly, it's running into this 14 smooth moving average. So this should be support. It should find its way back up to 2357 at least. Um, and then next month would be the critical month to watch because if it bleeds below this upper bound EMA again, that could be bad for Galaxy. Usually, though, you want to see it. You want to see it run against this green EMA 3 months in a row. So if it does that, like if it closes below this EMA like this month, and then next month it runs into it again, and then the third month you see it runs into it again, and it might close below, then that's bearish. It's gonna sell off.
Mm.
So yeah, it's definitely something to watch. Um, but yeah, now like since the quarter ended, I have to update the quarter. So I'll go based off the previous quarter that ended, and then boom, that's how I get my fibs for this quarter. So far we could be tracking down to the 0% fib at $16. That's what it looks like it's on pace to do. But we'll wait to see. Let me look at the OPEX for the next OPEX. It's oversold. So that should be good news. Yeah, it's definitely oversold right now. So Galaxy should find its way back to 25. Like, do you see like how I'm seeing all of this data and then like because I just said the exact opposite of that. So I'm looking at the monthly. I look at the monthly, I'm seeing support. Then I look at the weekly, I'm like, okay, it might track to the 0% fib. But then I look at OPEX and it's oversold. How do I know it's oversold? Because these ratios are off. And I see this guy coming in with the put selling at 17.5.
Mhm.
So it's like you take all of this data together and then you're able to read the stock. And I don't know if any DPs came, but that would also add to whatever I'm thinking. It might shift whatever I'm thinking in one way or the other.
Look, man, I'm gonna have to take some time to really digest this.
Yeah, I definitely have the recording. Hopefully, it recorded everything. Um, yeah, hopefully, it recorded everything so you could go back. Like I said, whoever came in today, I'm gonna send you guys the moving averages for free. Just get more used to just using desktop. If you need to get a laptop because you're never home, I would recommend that. That's something that I did recently too. Because the desktop version of Webull is like it's bar none. It's top notch. The only thing that rivals Webull right now is Thinkorswim. I use Thinkorswim too.
Yeah, if
But
you could like do that YouTube video and with the private link, if you can,
yeah,
you don't have to, but that yeah, just this way it's a little bit of a reference, and I'll be able to make uh, utility of the laptop. But I'm usually not on the laptop, but I can do it for sure, man. It's just yeah, having this little tutorial really helps a lot because over message. Like, man, it's just not the same.
It's not the same. Yeah, I agree. And then we're gonna do more of these also. Um, should be pretty fun. But yeah, we'll definitely do more of these. But yeah, I'm gonna wrap it up for the night. It's 9:30. I gotta let you go, brother. But
Yeah, absolutely.
yeah, man, we'll definitely put the video up. I'll put it up tonight if I can. That way everybody can watch it, digest it, look back at it, etc., etc. And then because yeah, ultimately I want everybody to just if everybody could have the same brain or be better than me, that'd be so beneficial for me because it just means less work for me. You know what I mean?
Yeah,
Ultimately. So
100%. Yeah, I feel
yeah,
bad. You put in a lot of work, man, and I know, like, I'm so grateful. I'm sure I can speak for everyone else. Like, no, man, the work has been incredible, and just watching you get so much better over time. Like, I mean, there's been hits and there's been misses, but
for
you're
sure.
onto something. It's been evident from the start.
No, I definitely appreciate that. And I know I say that, but the work I'm fine with doing the work. It's not that it bugs me in any way, but it just makes it easier when everybody when everybody's in the same space mentally, and you could go see a stock and you could read it like how I'm reading it, and you could tell me, and then if I missed out on it, now I could go read it. And I could be like, oh wait, bro, this is great because you've done that a couple of times already. You've done that a couple of times, especially you. So yeah, I definitely appreciate it, and I'm gonna keep doing the work. But yeah, I definitely want everybody to understand this because this looks like it's something that only a handful of people are gonna know when it's all said and done.
Yeah, I wish I could put in more work. It's just juggling life and stuff, man. I don't know how you do it, but like I said, I'm really grateful. So if we could have a reference, like going over this, and I look back on it, and yeah, put that into my Webull account, and then we'll go from there.
Sounds good. Well, I'm gonna let you go, brother. I hope you have a fantastic night. This was a fantastic session. We'll do more in the future.
Yeah, absolutely, man. It was good talking, good chatting, and
Good chat.
yeah, we'll be yeah. Monday comes around, we'll be back at it.
Sounds like a plan. Well, thank you so much, man. I hope you have a great night once again.
All right, have a good night, Josh.
Thank you.
Yeah, see ya.
See you.